Welcome back to the channel and let's talk about Facebook. Facebook is an interesting one because up until recently it was considered this sleeping giant since it was a FAANG company with the lowest valuation when compared to Amazon, Netflix, and Alphabet. However, the stock rally that has been going on since the beginning of March has increased Facebook's stock price by around 20%. So in this video, we're going to explore whether this social media giant is still an attractive investment. To evaluate this, we're going to look at Facebook's financials, its business model, its main products, and what the future may look like for Facebook. So I hope you enjoy this video and let's jump right into it. Start off by giving you guys a brief overview of the company. So Facebook currently has a market capitalization of 879 billion US dollars. It currently employs 58,604 people. It was founded in 2004 and is headquartered in Menlo Park, California. And now is where it gets interesting because probably most of you know that Facebook operates in advertising and social media. But there's another branch that Facebook has recently been expanding into, and that's virtual reality. With the acquisition of Oculus, Facebook has taken up this market, and we're going to talk about that a bit later. Now, Facebook's mission statement says to give people the power to build community and bring the world closer together. All right, sounds pretty good. So let's go on. Now let's take a look at the price chart. Now if you had invested back in 2017, you'd be looking at a return of 182%, which is really nice. If you compare that to some of the other FAANG companies like Netflix especially, of course you're looking at a return that's not as great, but I mean it's still a very solid return here. We are looking at a price low of $110, which was back in 2017. And right now, Facebook is priced at an all-time high of $312. Now, when it comes to the shareholders, we have a lot of the typical institutional shareholders here, like Vanguard Group, BlackRock, which holds 7.6 and 6.6% respectively. So nothing, too special here. But one thing I don't really like to see is the insider ownership being at such a low percentage, only 0.6%, which, if you compare that to Amazon, that's pretty low. That's on the lower side. And why is that important? Well, if the owners, if especially management is invested, has a stake in the company, that aligns their interest with the shareholders' interest. Now, even a 0.1% stake in Facebook is still a couple of $1 million. So, I'm not really complaining too much. So even if management only had 0.1% here, that would still be a pretty decent amount. And I'm pretty sure their interests are pretty much aligned here with the shareholders. But, this percentage could be a bit higher, ideally. All right, and let's look at the financials, more specifically at Facebook's income statement. All right, there's basically four figures that I want to look at here. The first one is total revenue. We can see that in 2020, Facebook earned 85,965 million. So that's 85.9 billion US dollars. Compare that to 70.6 billion in 2019, and you get a nice 22% increase in total revenue. So that's really great. Another figure I want to look at here is net income. So we have a net income of $29.1 billion last year and a net income of $18.5 billion in 2019. So that is an increase of a whopping 58%. So what does that tell us? Well, it tells us that Facebook has had to decrease its costs somewhere along the way. And this brings us to operating expenses. We can see that operating expenses increased from 33.9 to 36.6 billion US dollars from 2019 to 2020, which is a 9% increase. But relatively speaking, if you compare that to the gross profit that we can see, up in the revenue section, then as a percentage of gross profit, this is actually a decrease, even though in numerical terms it is an increase. But as a percentage of the gross profit, this is actually a decrease, and that is where some of that net income is coming from. That increase in net income of 58%. Another thing that we see here is an increase in R&D spending, R&D expenses, which isn't necessarily a bad thing. This is actually mostly a good thing, because it shows us that Facebook is investing in new technologies, new features that it can add to some of their products, and we're going to look at that in a bit as well. So this is actually something very good to see, especially considering that Facebook is a very large company. And what happens sometimes at these large companies, especially very successful companies, is that they start to become a bit lazy and not innovate as much. I mean, this is something that we've seen so many times in the past. I could take Nokia, for example, as an example here. The iPhone came out in 2007, and Nokia kind of failed to catch on to this innovation, to see the potential it had. So Apple completely took over the market in smartphones in general, and Nokia was just kind of lagging behind, and in the end they're just too late to the party. And as you know, Nokia doesn't exist anymore, at least in the form that it existed back then. And Nokia had a market share of more than 30%, especially in Europe. It was just a huge company, and had huge telephone sales. So it's a great thing to see that Facebook, even though it's already very successful, is still investing a lot in research and development. And we're going to see in a second why Facebook is investing all of this money. All right, let's go on to how has Facebook been doing in the past 4 years. If we look at profit margin, we can see that their profit margin has decreased a little when we compare to 2017, 2018 levels. So it's a bit lower now, and we can see that Facebook has been doing a great job at increasing their revenue, but not as much increasing their net income. And there's basically one big reason to this, and it's maintenance, data maintenance. It's maintaining their platform and monitoring it. Because what happened in 2016 is that many institutions, many different parties used Facebook to meddle with the US elections. There's talk of Russia being involved and Cambridge Analytica. And of course, that kind of shone a bad light on Facebook. It hurt their reputation. So they don't really want anything like that to happen in the future, especially now that they're trying to go more into the financial sector. And the financial sector is always something that, where people want to feel very secure. So Facebook definitely needs to step up its game in this regard, monitoring its platform more closely. And this is where some of these increased costs are coming from, some of these operating costs, because they've had to hire more people to monitor the platform, so that nothing like the US election of 2016 happens again. All right, let's go on to debt to assets. We can see here that their debt to assets ratio has increased a little from 2017 to 2020. This is because of an increase in liabilities. And but we can see that in the same period, their assets have grown quite a lot. But this is actually not a very bad thing. It just means that they might have taken on more debt in the recent past. But considering the low interest rates, it just makes sense to borrow money instead of using your own money at times, because you can finance projects very cheaply, at maybe a 2 to 3% interest rate, which, if the project can get you a return of 10% or more, then it just makes sense to borrow that money to do that. And this is probably what Facebook has been doing. So in order to sort of optimize their capital structure here, so this is not necessarily a bad thing. All right, let's go on to cash flow. Nothing really notable to talk about here. We can see that their operating, investing, and financing cash flows have remained pretty constant. So yeah, nothing special to talk about here. All right, but the valuation is where it gets really interesting, because we wanted to find out if Facebook is still cheaper than some of these other FAANG companies and the competition. So what we can see is that Facebook is still actually pretty cheap in comparison to, if we look at Google, Pinterest, Snapchat, and Twitter, which are of course some of the bigger competitors, especially in the social media space. We can see that Facebook has a PE ratio of 30.5. If we compare that to Google's or Alphabet's PE ratio of 38.39, it's still much cheaper here. And this goes on for some of these other ratios like forward PE, EV EBITDA, PEG, and I also put you some of the definitions up there in the info box. Now if we get down to price to sales, price to book, yeah, Google is a bit cheaper, but there's not really that much of a difference. So overall we can say that Facebook is still quite cheap. I mean, it's not a cheap company, but compared to some of these other, especially social media platforms, it is still looking pretty cheap. All right, let's get on to debt and liquidity. And I have to say that Facebook is incredibly liquid. If we look at some of these ratios, current ratio, quick ratio, cash ratio, which are commonly used to evaluate a company's liquidity, we can see that it's just incredible, because usually a current ratio of 1.2 is considered very good, and a current ratio of about 2 is like excellent. And Facebook has a current ratio of 5.05. Which is just incredibly liquid, and they could even think about bringing that ratio down a bit, because apparently they have a lot of current assets, which doesn't really have to be a good thing, because it could mean that they're not really using those current assets, especially if it's cash, to invest in some interesting projects. Now if we go into the quick ratio, we can see that it doesn't really change much from the current ratio, because Facebook as a tech company doesn't really have that much inventories, and the same goes for cash ratio. All right, now let's look at Facebook's business model canvas. This gives us a pretty good overview of what Facebook is up to, some of its key partners, value proposition, where the costs coming from, and what revenue streams does Facebook have. So looking at the key partners, of course, we have users, VIPs, brand, content creators, developers, advertisers. These are the key people that bring some of the revenue to the platform. Then key resources, we have active users, content assets, user data. That's of course, the lifeblood of Facebook, the user data, that juicy data they're getting from us every time we like a photo or comment something. And this allows them to, of course, optimize their algorithm to show us ads that are ever more relevant to us. So this is definitely a key resource here. And this brings us to key activities, which is engaging users. This is really what Facebook tries to do. That's its main goal, engaging users to stay longer on the platform, so that they consume more of that juicy advertising, so that Facebook can get that juicy revenue. And how do they do that? Well, they add new features to the platform, and we're going to talk about some of those features in a bit, especially when it comes to Instagram. They really want to make people as addicted to the platform as possible, and they need to do that by innovating. That's also one of the reasons why they're investing so much on research and development in order to innovate, to find new ways to trick us to get back onto the platform and consume more content and more ads. And all of this allows them to improve their algorithm, get more data, improve it even further, and ultimately make us really, really addicted to the platform, which from an ethical perspective, maybe not so great, but from a business perspective, it's a pretty solid business model. All right, now let's get on to the channels. So what are some of the channels that Facebook uses? We have apps and websites, notifications, those little pesky notifications that you get the middle of the night, and usually it's not even anything important. And then business tools, news feed, and so on. All right, customer relationships, we have, always this conundrum. We have this conflict between community standards and free expression, because they have to maintain some standards, of course, but that means cutting into people's free expression. So that could be an issue, but they have to find an equilibrium, like a balance between those two. Especially considering safety and privacy, they really want to monitor that, because as I mentioned before, they want to go more into the finance sector, transaction sector, and the platform needs to be 100% safe, and people need to trust it in order for them to use it to make payments, right? All right, the value proposition, there's two sides, of course, to the platforms that Facebook operates. So we're talking about Instagram, WhatsApp, and Facebook, but especially Instagram. We have the user, which of course, what kind of value does he get from using the platform? Well, he can contact friends, can see relevant content. He doesn't get bored because he can just look at some pictures. He can follow people that he's interested in, and he can also follow the news. Now, what do influencers and businesses get out of it? Well, they can build their brand, they can penetrate markets and segments more, closer and better, more efficiently, because they can get their ads to people that they want to get it to, because they already seem interested in those types of products. So it's really all about advertising. And another thing that's really important is immediacy, because this is something that didn't really exist even 10 years ago. Companies had to advertise on TV or on the radio, and people then could go to the store to buy their product, or those types of things. But now it's so easy, because these companies can advertise on Instagram, provide a link to their website, and people can purchase their product immediately, or they get comments, responses immediately. So this is another really added feature and added value to the platforms that Facebook has created. All right, so where do the costs come from? Well, we have traffic acquisitions costs. So this means how much does it cost to add new users to the platform? And this is actually something that is really impressive, because Facebook, even though it's sort of reaching a limit of where it can't really acquire more users, because there's already more than 2 billion people on the platform, and there's only 3 billion people in the world that are on the internet. And a lot of those people actually live in China, and of course those people don't have access to Facebook. It's really interesting that Facebook has still been able to increase their revenue so consistently over the past years. And what that means is that it's been able to monetize their users more effectively, more efficiently, because the growth is not coming so much from user acquisition anymore, because they're sort of reaching that limit where they can't even get more people on the platform, because there simply isn't any people left. All right, the second point here is IT operations and infrastructure. I talked about that before. It's one of those things that they have to maintain all of those servers. And we have R&D, as I said before, customer service, and data maintenance and protection. Now, if we look at the revenue streams, you may notice that there's, not all that many. There's mostly ad revenue still. More than 95% of Facebook's revenues come from ad revenue. But then we also have some payment transactions, which is, a segment they want to expand into, and then also consumer hardware with AR and VR glasses, and we're going to talk about those in a couple of minutes as well. And now let's look at some of the recent developments that have happened here at Facebook in terms of their product. So WhatsApp. Well, WhatsApp has over 2 billion users. It's actually the biggest messaging platform in the world, and it processes over 340 million minutes on video calls per day. Just a little fun fact here on the side. But what we actually are interested in is WhatsApp Pay. This is a service that recently rolled out. It rolled out in Brazil mid-2020. And it's free for private individuals, as those things tend to be, but companies on the other hand have to pay a processing fee for receiving customer payments. So this is pretty much out of the book. This works just like PayPal or any of the other digital payment services. So nothing special here, but it's a really nice added feature, especially for private individuals being able to send their friends money over WhatsApp because they're already using WhatsApp anyways. So this is definitely a cool feature they're adding right here. And then WhatsApp Pay in India, so they're also rolling out this function in India right now. It's a bit more complex over there because they have to work in cooperation with the National Payment Corporation of India. So this makes this whole process a bit more difficult, but overall, it's been a success. There have been some problems, especially in Brazil, but overall, we can be pretty satisfied with how this has been going. The second product, which is Instagram. Instagram is, the sort of flagship model, flagship platform of Facebook, not even their own platform, not even like Facebook itself, the platform Facebook, has that much potential because Instagram is just getting bigger and bigger by the day, and they're adding more features. And the crazy thing is that over 1 billion users, over 1 billion people use this app, this platform, and over 500 million of them use it on a daily basis. This is just a crazy engagement rate that almost no other platform out there has. I'm not sure about TikTok, but some of these other platforms definitely don't have such a high engagement rate where people spend at least a couple of seconds every single day on the platform. So this is really crazy. And we can see how Facebook is trying to get these people more and more addicted, and how it's trying to keep them from leaving Instagram is by adding new features. And we have 3 of those recently added features down here. The first one is Instagram shopping. So this is just a feature that allows you to directly shop on Instagram, or find links to different websites where you can buy the product that you just saw in a photo. So it's a really good feature to make Instagram a bit more business friendly. Then we have Reels, which to my understanding is kind of like TikTok, I would say. It's really a copy of TikTok, because it's these little multi-clip videos with audio effects and creative tools, and it's mostly being used to make these little music videos. So I would say they definitely copied some things from TikTok here. And then the second thing, which also reminded me of TikTok, is suggested posts, because it used to be just that Instagram users would follow certain people, and then they would only see publications, posts from those people. But now, once someone has actually scrolled through every post that all of the people that they're following have uploaded on that day, Instagram actually starts suggesting other posts to that person, which is kind of like TikTok, right? Where the algorithm sort of chooses posts for you that could interest you based on what you've seen before. So definitely very interesting tool or very interesting feature they've been adding here on Instagram. This is where it gets really interesting because Facebook is expanding in the VR and AR segment. This is really cool because I actually couldn't believe it when I saw it, but this market is growing at 93% annually. So this year, for example, it's expected to grow 93%. And the great thing here is that Facebook already has a market share of 28% of the VR and AR segment. So this is really exciting because Facebook I think they're really onto something, because they are developing these glasses, VR glasses, where people can use them to create this VR or AR office space, so people just don't have to use screens anymore. They can look at different tasks they're doing at the same time through these glasses, and it's just, you get a much bigger overview of what you're doing at that moment. So I think that's definitely something very exciting that's happening here at Facebook, and yeah, I'm excited to see what they're going to come up with in the future, and how this is going to look like in the future, because I think this is a segment, if it's growing that much, that will definitely become a major revenue stream for Facebook over the next 5 years. Now let's look at some of the news that concern Facebook. So the most important news over the past days was Biden's tax plan, actually, and this one sort of targets one Trump tax feature which they want to eliminate, which is the foreign-derived intangible income deduction. And what this means is that companies that derive income from other countries could deduct part of that income from their taxes. And especially the FAANG companies, so Facebook, Google, Amazon, Netflix, and so on, they derive a pretty large chunk of their income from other countries, from abroad. So it's definitely going to hurt them quite a bit. Facebook is actually not the one that's going to be hurt the most. According to some estimates, it's probably going to cost them around $630 million in benefit. At least that's how much they got last year. So it could be even more, next year, if they derive more income from other countries. But Google is actually the one that's being hit the most here, and because they derived over 1.2 billion, 1.2 billion exactly, dollars from other countries, which they were able to write off here under this law, which they will not be able to do in the future probably. But this is not really all too concerning, especially for Facebook, because they just have such a solid financial position, and overall they have such a huge net income, that 630 million is not going to hurt them all too much. I mean, it's still a pretty big bite out of their foreign income, but it's not all too concerning. And as we can see, the same day reaction on the market here was that the Facebook stock went down by 0.58%, which is just a bit of volatility. It's nothing, especially if we look at some of the companies that recently got decreased by over 15%. So this is really nothing, and we can see that investors are not all too concerned about this. All right, one other thing that I like to look at is insider trading. Insider trading is important because it kind of shows you how confident, the owners of the company are. And we can see here that Mark Zuckerberg has been selling shares over the past weeks, but this has actually been going on for a couple of months. So on average, he's been selling more than 12 million worth of Facebook stock every day for the past couple of months. And there's a lot of speculation as to why he's doing this, but last time he sold a lot of shares, he needed a lot of cash to pay a hefty tax bill. So maybe this is what's happening right now. We don't really know. I wouldn't say it's too worrying, because even like 12 million a day is, if you look at the market capitalization of Facebook, is not all too much. It's definitely not great to see the one of the founders of Facebook, or the founder of Facebook, selling his shares, but I wouldn't say it's all too concerning here. So what are analysts saying about the stock? We can see that analysts definitely see it as a buy. Their buy rating has decreased a bit over the past months, which is logical because of the price increase. So of course there's less upside to be seen, but as we can see here with the price targets, most analysts still think that there's some upside to Facebook stock. We see that the current price is $312, and the average price prediction here is $339. The recommendation is around 1.8, so it's definitely a buy. And there's really only very few analysts that are saying that you should sell the stock or that it will underperform. So it seems like there's consensus that Facebook is still a pretty solid company to invest in. And this brings us to our conclusion. Now let's go over the pros and the cons, and let's start with the pros. So of course, Facebook is the biggest social network in the world. It is growing still at a high rate. It's making investments in future technologies, and overall it has a very strong company portfolio with WhatsApp, Instagram, and now Oculus, so very solid all around. Of course, there's some cons to the company, as always. It's still very reliant on ad revenues. Insiders are mostly selling shares, which could be kind of a bad sign, but I wouldn't be too worried about it. There's new tax regulations which are definitely not favoring Facebook, and we said before, the valuation is on the lower side compared to some of these other companies, but it's still a fairly high valuation compared to other value stocks. But if you look in this tech sector, you're not going to find anything cheap at the moment. So overall, I think Facebook is a great investment, and I'll definitely be adding it to my portfolio. Let me know in the comments what you guys will do.